Sideways line. Okay? I'm just using I hope iMarket's life doesn't go sideways. I hope we go up forever, but you got to be real. Okay? Every company goes through growth and sideways and down and up. And we went through enough down over the, past couple of years, and we went up pretty good. But so you've gone sideways long enough here. I don't know if I use iMarket's life as an example, but whatever, it doesn't matter. The point is, you guys understand. So you've gone through this sideways line, this extended sideways line, and nobody wanted to take control of one side. They brought it down here by trying to sell it, and they got stuck because they tried to sell it out of the range, and the buyers took it back up. And when they got up here, the sellers came back in control. And then the buyers took control. And then the sellers took control. And the buyers took control. And the sellers took control, and the buyers took control, but the sellers couldn't push them down too far. And you had that first little flaggish, but you had a big range here, right? And then the buyers came back in again, and once they came above, everybody wanted to be in. Auction market theory. Okay, auction market theory. Okay, it's the auction market. This is the theory. Everybody wants to be in. It's went sideways so far, it needs to go up, right? Then it goes sideways again. It goes sideways again. So until it gets above here, until it gets above there with impulse, let's just say it goes like this, and like that. So until it goes outside of it, you're still going to sit in what's called a sideways line. This is where most people get hurt. I don't like looking for markets that are in sideways lines. However, I do like looking at markets that are like this, that are forming particular patterns, where maybe a harmonic pattern is something. Harmonic patterns are great in ranges. Harmonic patterns are great in ranges. They're also great when the market does this, okay? And you're in an uptrending environment, and it forms that bullish pattern. Or if you're in a sideways environment, right, the market's been going sideways, and it does like this, okay? Okay, and what had happened was you're forming ranges with the market above. So two ways to look at harmonic patterns. One is in a trending environment, and another one is in a range environment. You see? Hector Seda, welcome back, man. Mark was telling me you weren't feeling so well. Hope you feel better, brother. All right. So anyway, this is what's called auction market theory. These are unfair lows, unfair highs. This is, they got all sorts of little terms for this. But this is how auction markets work. And if you understand the trading environment, this is how trading works. You're looking at it as patterns, but the market thinks in terms of auctions. It doesn't think that you got this bull flag. It's just a natural occurrence from the auction market. So when you're looking at something like this, market rallied up, and now it's getting that consistent, it's holding, and it's forming that this sideways line came out. It's now forming that consolidation because everything's out of the range now. Now it's starting to consolidate, and the buyers are starting to accumulate. As it starts to accumulate, we're going to start seeing better impulse to the upside. So I thought I'd share that with you. It's a little class we did here.